All right, everybody. Hey, Patrick here, Prime Ag. A little bit of a rainy day and cooler week here in Wisconsin, so we wanted to get in front of the camera and do another webinar. We've been talking with producers on the bean market, and if you've seen our past webinars in here, we're a little bit bearish the bean market here going into 22. Fundamentals just aren't that strong right now, and so we've kicked around the idea of being a little more aggressive on cash sales. And so what we're going to do is kind of talk about that and then show some strategies here, but especially a bull call spread to re-own, as we are obviously almost a full year out from next year's harvest. So jumping in here, bull call spread for Nov 22 beans. What it is just buying it out of the money call and then simultaneously selling a further out of the money call. The reason why you do that is to help finance your original call purchase. And why are we looking to do this? Well, just like we said in conversations we've had with producers in here lately, everybody seems to like this number. In-house, we're showing about a net profit per acre of $200. We think that's pretty good, but mostly we're a little cautious of the long-term fundamentals here of the bean market. But again, we have to respect the fact that if we're going to be aggressive cash sellers in here, we do need to have some staying power in the market in case of a weather issue, major crop issue, whatever it be. As like I said, we do have a full year between now and next harvest. So specifically looking at buying like a 1280 call for 60 cents and then selling a 1480 call to collect that 20, bringing your net price to about 40 cents. Here's a chart, Nov 22 beans, kind of how this all looks. Blue line right there represents cash selling HTA 1220 futures. Your orange line show the call spread. So buying the 1280 call, that's that first orange line, and then selling a 1480 call is your upper limit, that second orange line. And again, we do that for about 40 cents. You need a break even here, and what that means is at option expiration end of October, you need November futures to be above 13.20 for your break even price on this. Okay. On the other hand, if these options expire worthless, what you're looking at here is a net price of 11.80. So we would call that not bad. And again, the whole point is to paint the picture here that if you like this 12.20 price here for next year, you want to make some sales, lock in some profits. This is how you can cover some of those sales. So let's say you do 50% cash at these levels. You could come back and re-own 25% of those, transferring risk to the board with this bull call spread. And if things don't work out, you're looking at an 11.80 net futures price. We can compare that to buying a bean put. We did bean puts last year in the summer. We have quite a bit more time value in these puts, so they're a lot more expensive. But again, looking at the long-term fundamentals of beans, it feels like some decisions need to be made, at these levels. So just for comparison's sake, buying a 1220 put would run you 80 cents. You wouldn't make any cash sales right now. You just buy those puts, hold on to your bushels. If the market goes up, you're completely on board, less the 80 cents. If the market breaks down, you're looking at an 11.40 net futures price. So about 40 cents lower than if you were to make the cash sales today and then cover with some calls. And then here's just looking at a straight out call option. Again, going back, buying that 1280 call, that's your orange line right there for 60 cents. You have no upper limit on that call, but you do need to be at 13.40 would be your break even price here on that call option. Again, you would look to sell 1220 futures in the cash market or HTA, sell some physical bushel for next year. And if the calls expire worthless, you'd be at about 11.60. So, again, as we play this out based on options expiring worthless, doing that bull call spread is going to be, what we believe in your best interest if, in fact, the market doesn't run higher. Now, on the flip side, again, to keep in mind where I said break evens were on the call spread, your break even is 13.20. On the single call, your break even is 13.40. However, on the spread, you do have a limit of 14.80. You have no limit here on this 1280 call. So some trade-offs as with everything. But again, for us, leaning bearish, we're looking more at the bottom line of where that net futures price is going to be. And if guys want to be aggressive cash sellers this early in the season, we kind of lean a little bit more towards that call spread. So just to wrap things up in here, again, all we're trying to do is transfer, long risk to the board, be on board for a major market move. That's the key. You're going to miss out on 50, 60, 70 cents in here. What we're trying to cover is the $1, $20, $32 move. So as I pointed out before, $13.20 is going to be your break-even price at expiration on that call spread. You can kind of trade the option premium a little bit ahead of time, talk with your broker on that. But if you're holding these all the way through expiration, that's what you're going to be looking at. On the flip side, if the bean market is at $15 at option expiration next year at the end of October, your max gain on that spread would be $1.60. So you take your net futures price at $12.20, add your $1.16, you'd have $13.80. Futures less your commission and basis. So again, you do get to capture some of that upside move if there is a big move. And then, like we said, on the downside, you'd have an $11.80 net futures price. So just want to get this out there to everybody. If you found it helpful, please hit the like button. If you have questions, email us. We can certainly tailor these a little more custom to what you're looking to spend, what kind of ceilings you want. There's quite a bit of versatility in how we can do this, but wanted to get this out there, get you guys thinking a little bit about next year and how to manage risk. I mean, that's what it's really all about. So again, if you have questions, call us 800-211-1757. Email us. The email address is in the description below. It's admin@prime-egg.net. And if you'd like to be, again, notified for any additional new content we post, hit that subscribe button, and we will see everybody next week. Thank you.